Welcome back, Masterclass students and CTKS service members. What I'm going to do today is to have a look through the three-dimensional price paths on a selection of the service charts. We're going to focus in to what's happening with crypto, how it's being reflected inside the main markets and row 1 and row 2 of the cheat sheet, in order to understand more effectively where things could be going inside the next couple of months. Let's run the numbers. First of all, we're going to look at the three-dimensional price paths called CTKS paths for Bitcoin and Total. I do these each and every month inside the service. And just a quick reminder, these are drawn through Level 2 Standard Certification, just here, Lesson 22. CTKS method paths are incredibly powerful. They seek to represent normalized price momentum. And sometimes we get non-normalized price momentum. So when we look at Bitcoin in November, what happened here? President-elect Trump was not president-elect anymore. He became President Trump. And the concept was crypto will be freed from the SEC, all those pesky lawsuits will be dropped, and America will become number one in the crypto space. The markets rallied like hell, and then went flat, then slightly positive, and now negative. One thing financial markets always require, if you get non-normalized price action, typically it's just too much for price to digest. That's why we've been going flat for the past quarter. Just zooming in to the current month, we can see currently Bitcoin is 94,139, and it was really quite negative at the start of the month. It followed the normalized negative price path, but it's had some buyers come in. We've seen the alts bleed, while Bitcoin is the flight to safety inside the crypto market. Looking at the past quarter for total crypto market cap, we've seen a neutral price path after November, also a slightly positive, and now we're following that normalized negative price path. We just tapped it. Normalization is a big part of price momentum, and price is always moving in a wave. It's always coming up and down, up and down. Please be aware of this. Even though we had a massive fall in total crypto market cap, it's come back to the normalized price path, and we see this time and time again. But the fact is, Bitcoin is around here and total crypto market cap is down here. Now, what does that mean? It means the alts have absolutely been bled out. If you're new to CTKS method paths, they're always drawn in terms of structure. And when we look at ETH, at the start of the month, ETH was incredibly negative. It literally came down to 2100. It's currently 2658. But we can see that it's come down and just following that normalized negative price path at the current time. Always remember, price is always moving in a wave. It's always going up and down. This is what price does. Price moves in a wave. We have to understand how price momentum and normalized price impact the market. Markets will always normalize. A very important role of CTKS method paths is to try to bookend the upper limit and lower limit of price variation in a specific month. For example, when we look at the S&P 500 inside December, the price path went quite neutral for a time but finished about halfway down between neutral and negative. Then the next month it went almost fully positive, but you can see this reversal that occurred here. Normalization is a really important factor. You need to keep it on your radar. Right at the current time, we were going positive, but over the past couple of days, we've seen a lot of negative price momentum. Looking at the Nasdaq in the past month, we saw that the prices were going really quite positive, but the last couple of days have been brutal. We've left the positive normalized price path and come down to the consolidation path. When looking at the Dow, we can see that we started the month relatively positive, we went neutral, and now we're back at the normalized negative price path. But the month before, we literally just about closed out on the positive price path. So what's happened to the Dow? It went positive, then it went negative. It's retraced. This is very normal. When looking at the Russell 2000, we saw that it basically finished neutral last month. This month started positive, decided to give up the gas, and it has gone slightly negative. All the major market indices will tend to move together. A lot of people inside the stock market will disregard crypto, and a lot of people in the crypto market will disregard the stock market. I hope this proves conclusively that you should do neither. If you're in the stock market, look at Bitcoin as a risk-on or risk-off signal. And if you're in only the crypto market, please make sure you look at the stock market, because Bitcoin cannot escape the stock market's gravity. We've seen the major market indexes, the S&P 500 futures, the NASDAQ futures, the Russell 2000 futures, and the Dow futures all come down. And look at that sweet directional correlation. It may not feel very sweet at the moment, because as the S&P 500 comes down, Bitcoin comes down. As the NASDAQ is coming down, Bitcoin is also coming down. And when Bitcoin bleeds, the alts bleed profusely, because no alt can escape Bitcoin's gravity. We've been looking at the price paths across selective cryptos and selective major market indices. We need to look at those price paths with selective row 1 and also row 2 from the cheat sheet. Understanding where these are going you'll understand what's happening to the rest of the market. One thing that we saw at the start of the month for row 1, the VIX, the fear gauge of the market, it was below the normalized negative price path, but it started to turn around. This big increase in the VIX has been pushing down the S&P 500. It's been pushing down the NASDAQ, pushing down the Dow, pushing down the Russell, pushing down Bitcoin total, and all of the alts. Typically, what happens when the VIX increases, we get a commensurate increase in the DXY. That has not happened. We've got a slight increase in the DXY over the past couple of trading sessions, but nothing to write home about. You can see the DXY is clearly following the normalized negative price path. These price paths are drawn across the 32 components of the service. That is the cheat sheet. The service analyzes the cheat sheet structural levels, momentum, and direction. When looking at the US02Y, we can see that it's actually been decaying over time, and the yields came down really substantially over the past couple of days. This chart is on a daily basis. These particular paths are always drawn by structure. Now, what happened at the start of the month? We found structural support, rebounded, found structural resistance, and we've just broken underneath structural support. It's vitally important to keep your eyes on the Forex pairs as well. When we look at dollar-yen, which is just a way of cross-triangulating the DXY, we see it's on the normalized negative price path. These normalized price paths may look easy to do, but you'll need to gain a lot of experience and practice to draw them out. They are always structurally based. And for the service members, they're drawn at the start of the month and then they are not changed. So we can see the VIX has been basing, pushing upwards. The DXY has been flat, pushing downwards. The 2-year has been decaying. The 10-year is also decaying. Some pretty big drop-offs, but it's hit that normalized negative price path at the moment. Just be aware that you can get big pull downs and then big surges, pull down surges, pull down surges. A lot of people tend to think, okay, because it's come down, it must continue to come down. This is not the case. Price is always moving in a wave. Looking at the price path, the normalized price path for oil, we can see that it's come down and has been consolidating through the normalized negative price path. Understanding these paths and especially how to draw them is very, very important. If you don't know where price can fall down to, you'll just expect it can go literally to zero. This has not ever been the case. There is always structural support below price and structural resistance above price. Knowing where the structure is incredibly important. Also, knowing what the momentum is like is also as important. The major problem that we're facing in this particular month is the VIX. The VIX was going negative and based and has been going positive. When we see behavior like this, and it's not following the normalized negative price path, but starting to gain momentum to the upside, we must be aware. Looking into row 2, we've seen junk bonds performing very well, but it hit the normalized positive price path and has basically flatlined. If the VIX continues to spike up, we would anticipate junk bonds retracing at least to the normalized neutral price path, if not negative. Knowing where things can go is vitally important to you as an investor or a trader. Knowing where the structure is inside the market is absolutely vital. If you think about these price paths, they're drawn across Forex, commodities, crypto, the stock market, bonds, yields, all sorts of things, and they are incredibly powerful. We've seen the euro just have come up on the positive price path, but it's starting to flatten out. With the increase in the VIX, we would anticipate if that keeps going, the DXY will start to gain strength and the euro will start to fall. When looking at row 2, the Aussie dollar is important to look at because it's commodity centric. And we can see that the Aussie dollar has broken out from that level of overhead structural resistance to the next level of structural resistance and is following currently the positive price path. You'll find that many times, service members have seen that many times if price continues in one direction, it tends to hug the normalized positive price path, unless we're witnessing non-normalized price action, and that doesn't occur very much. But when it does, it is significant to take note of. We can also see that gold has been following the normalized positive price path as well. Silver has been following the normalized price path across the majority of the past month, but now with the VIX coming up and potentially the DXY and the yields going to come up, or at least rebound, we've got to keep our eye on this. We're seeing some weakness inside silver. Weakness inside silver typically translates to weakness inside gold. A lot of students make the mistake of drawing their normalized positive price paths to reflect where price could be or price is going. We're only seeing where interactions within structure make price significantly. And when we look at copper, copper exploded up literally across the 480 mark and has been decaying back to the normalized positive price path. This is why normalization and understanding it will make you an absolute fortune. But as with all things, you need to understand what you're doing and what moves these particular charts from one chart to the next. When looking across the cheat sheet, we've seen negative price momentum across row 1, positive price momentum across row 2. In terms of the major market indices or indexes, we've seen the S&P 500 and the NASDAQ done really well, but over the past couple of days, because of the spike in the VIX, the S&P 500 and NASDAQ have both retraced. The Dow has been under pressure for quite some time. It is more reflective of what's happening inside the market. So the Dow and the Russell have been selling down. This has introduced weakness across Bitcoin and total crypto market cap. The crypto market is very risk sensitive, so you use it as a guide to figure out where the main markets are going. And for the service members, you can just go back inside the service and play the video for this month. How do you get there? When you log in, you just go to the community tab and you'll see the videos there. Just check out the Bitcoin area. When it comes to any financial chart that you're putting money into, it's very important to know where that price path can go to the upside under normalized conditions, where it can consolidate, and where it can come down to under normalized conditions. If we get shocks inside the market, they're very important to understand. If we get anything that exceeds normalized price action, that means a great deal to the markets as well. Typically, any overshooting of normalized conditions will result in retracements over the next couple of months, but it applies to the negative side as well. if we get adverse negative non-normalized price action, it will retrace upwards over the next quarter as well. Just keep these things in mind. Inside the Profiting from CTKS Method structure course, students of that, please make sure that you revisit week 2, understanding how and why these charts that comprise the cheat sheet move and predicting tops and bottoms in them is incredibly important. Inside week 2, we talk about who's driving the bus of risk, and literally the VIX is driving it at the current time. Please keep your eyes on the VIX. The reason that structure is vitally important is it tells us where support will be found inside the market and resistance will be found inside the market as well. We've seen a big push down over the past couple of trading sessions, largely because the VIX was basing and pushing upwards. The thing to remember, we've been here before. We've come into all of these moving averages, down to this moving average, back up to this moving average, down to this moving average. You get the idea. Even earlier in the month, look at how we cut down to this MA and straight back into them. But what actually occurred is that we found structural support inside market structure. I'll give you a bit of an indication. In yesterday's video, we were talking about the 96,493 and 94,574 levels of structure. They were the important ones to keep our eye on. What happened just literally just an hour or so after that video was shot, we came up into the 96,493 level and we faced a structural resistance. And then if this occurs, we're getting negatively structurally attracted to the structural levels below price. We're starting to come down to that 93,432 mark. This is not a problem. This is where we have a lot of structure inside the markets. However, inside social media, inside the news, it will be talk of 1929, the Great Depression, GFCs, and everything else. Many people thought that when we just breached that 95,800 level, we were going down to zero. No, we're going down to structure. And I mentioned this in yesterday's video. I mentioned that if we came down to there, we were likely to consolidate. If the bears gain control and push us below 93,432, this opens up the 91,487 area. But if the bulls get back in control and pushes above the 94,574 level, that opens up the 96,493 level. Please let me know in the comments, where do you think we're going? And to everybody who commented in yesterday's video, you're just awesome. It's wonderful to see so many people comment. The thing to remember from those price parts is a lot of people are bleeding out of the alts and putting their money back into Bitcoin. In yesterday's video, total crypto market cap was just about here, just below that structural level of overhead resistance. We saw that Bitcoin tapped it, structure didn't even get tapped on total crypto market cap. It came down to that $3.05 trillion level and lost it because the alts are bleeding currently. But when we get down to this $2.95 trillion mark, we'll start to see structure interacting again. And that coincides with the Bitcoin levels as well. It does take time to learn how to read the cheat sheet, how to see who's in control of the bus of risk, which one of these charts is driving it primarily. The truth is that they are all co-drivers and they all cross-triangulate each other. So getting to know the cheat sheet and how it works is vitally important. Keeping your eyes on the structural paths is also really wildly important. You must understand the direction and the momentum between the different charts. If you're an investor at this current time, Rule 138 is quite important. Understand that all investors become traders every single time they buy or sell. A lot of investors say, I don't really care where I buy there, I buy there, I buy there. It's not important. Believe me, it is vitally important. You've been told a lie that the markets are a zero-sum game. They are not. Markets simply allocate between people who know and people who don't know. That's it. If you know the rules of the market, you'll be okay. Unfortunately, these rules take a lot of time to learn. Having been inside financial markets for nearly 4 decades, I can help you out by sharing some of my rules, but it's very important you develop your own as well. Please let me know in the comments, what is a favorite rule that you've developed yourself? Always keeping your mind very positive is an important thing. Having daily positive affirmations for abundance, financial success, and happiness is part of the trading and investing journey. Unfortunately, you're told by retail traders and investors that the market only ever goes up. It's like this, it's up only. That's unfortunately not the truth. Even if it's going up, it can come down like this. And when it comes down, everybody cries it's the end of the world. But it's coming up and down all the time as well. Just keep your eyes on structure. And know that life pullbacks will give you the strength for the next life rally. Staying dedicated and committed, focusing on either winning or learning, and never blaming. It is absolutely the key to life, and just know that opportunities in life reset daily. Please let me know in the comments, what is a favorite positive quote of yours? I think at this time, sharing it with other people is a really good idea. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.